Hemang Jani also joins in on the show. So, Hemang, how would you categorize yesterday's move? Do you agree with Kotak's assessment that most of these mid and small cap stocks are still trading at full to lofty valuations?
Yeah, good morning. So I think after a long time, we are seeing correction across the board. But the irony is that while the Nifty is hardly, about maybe 2-3% away from the all-time high, when you look at the mid caps and the small cap names, the correction at the stock level is far more higher. The portfolio, contraction has been quite steep, which has come as a bit of a surprise for most of the investors. I do think that typically, March, you do go through this kind of a correction, and though we not had any major fundamental driven triggers, but it's more for technical, maybe regulatory, maybe some funding positions getting cleaned out, or so on and so forth. So I don't think there is a need to kind of react in a knee-jerk way. I think the correction is providing a great opportunity. The only thing is that one should try to have a little bit of balance between the large cap and mid cap, small cap, so that your portfolio remains quite stable versus having either most of them large cap or having most of them mid cap and small caps.
Have a balanced portfolio. That's the view coming in. But Hemang, what's the view on these smaller private banks at that? Because today they are going to be in news flow. Yes Bank, of course, there are reports suggesting that they might be looking at a new promoter. Federal Bank, South Indian Bank will be in focus. Would you be a buyer in any of these second level private banking names? Hemang, the question is for
As
you.
a space, yeah. So I think banking as a space would do well when you go through this kind of a phase. The high data, smaller banks through more pain. So the names like maybe a Yes Bank or IDFC First or Federal Bank, including some of the smaller PSU banks, when you go through their own sort of corrections. But I think that within the smaller banks, IDFC First looks quite compelling because Federal Bank also by and large numbers have been pretty decent. So, correction would be a great buying opportunity. And also some of the PSU banks, maybe, BOB, Canara, BOI. These are the names that we would be comfortable buying into through this correction.
Okay, just taking a look at some of the top drags on the frontline index as well yesterday, while of course it was the broader market that was far more damaged. Names like Power Grid, Coal India, NTPC, Tata Steel, Adani Enterprises all buckled under serious pressure yesterday. Naresh, what's your reading on the charts of some of these names?
So, as of now, the names which you looked at, the view is we've seen metal stocks correct as such. But what is happening yesterday, we've seen copper give a breakout. It's a 3 to 6 month minimum breakout. It's crossed that $4 mark. So metals as a sector looks interesting. Even the iron ore prices have come down to closer to the $100 mark, which is a major support. So from here on, metals actually is an interesting trade, wherein one can look at the first one is Hindustan Copper, which has corrected 20-25% from the top. Second is Vedanta, which has corrected 15% from the top. And then you have NMDC closer to 180 to 200 would be a good entry point. So overall, at current levels, we've seen a 15 to 25% drop in the metal names. And copper prices are breaking out. A lot of base metal prices look interesting. So a contra trade right now is to go long on metals.
Okay. Hemang, it's a very hard number to put, but let's see if you have to say how much of the percentage decline in small and mid-cap stocks is over. Is it 50? Is it 60? Is it more than 75?
Nikunj, I didn't get the question now. Can you please repeat?
How much of the sell-off in mid and small cap stocks to your mind is over? I mean, do you think 50% of the selling is over? I'm talking about the percentage drop.
I think, Nikunj, in terms of the pain that one is really going through, typically there are different stages of the pain, and initially there is a state of denial, and then there is some sort of a panic reaction, and then there is a capitulation. I mean, these are the stages that we normally talk about. So I think we are pretty much close to between panic and capitulation. I think over the next maybe few days, you would see a stage where there is a complete capitulation. And remember that it's very difficult to time this to perfection, because nowadays the corrections are also steep and the bounce backs are also equally steep. So I think it would make sense to kind of be a little well positioned rather than trying to be in a state where you want to settle down, you want good news flow to start flowing in. I don't think that the market is going to be so kind with everybody. So while panic is visible, I think we are very close to the capitulation stage.
We saw a brutal sell-off in Adani group of stocks yesterday. I'm just looking at the data. Adani Enterprises 5-day move 10% down. Adani Green 10%. Adani Energy 11%. And Ambuja 7%. NDTV 14%. Brutal selling in Adani group of stocks. 5-day change is almost down by 1,55,000 crore. That's like a massive sell-off there. Hemang, would you venture into buying or revisiting Adani group of stocks again?
I do think, Nikunj, that the fall was, very steep across all the names. Within the group, I think Adani Port looks to be the best bet. Fundamentally, I think the recent data points, indicate that the volume growth, the overall earning trajectory looks good. Typically also Adani, we have to remember that is also an election play. So when the election dates are announced, pre-election rally point of view, Adani would be one of the group that one could really look at. So surely, Adani Port would be one name that we would be comfortable buying into. Also, we are seeing, sharp correction in Ambuja, which is kind of partly because there were news that the existing investors who are holding Sexarias who are holding about 3% stake may be looking to exit. So that kind of led to some sort of a correction. But I do think that Ambuja and ACC both are great buys during this corrective phase, and these are the names that we will be comfortable buying in.
Okay, now there is no point in perhaps getting into very individual stock specific, mid-cap chat at least this morning, because everything is just falling in a jiffy. But the outperformance in large cap, which is what I want to go back to one point, that guys, bull market is not over. In a bull market, you will always get savage corrections. All bull markets, they correct. And periodically, when excesses are created in the system, they will get flushed out. It's happened, for example, in IT. It's happened, for example, in PSUs. So small and mid-cap stocks, gold had started trading at the price of diamond. That is what markets are telling you, that when you chase momentum and when prices, they get exceptionally higher because of demand and because of liquidity, then things in a sense will always revert to mean. But the macro picture is strong. GDP is growing. There are no macro risk on the horizon locally. Globally also, it's not looking that bad. The fear of a recession, at least in US market, that has got arrested. The fear of Europe really going belly up, that has got arrested. On the war front between Russia and Ukraine, that's passé now, that's completely on the back burner. What's happening in Middle East in terms of oil spike, that is also behind us. So on the horizon, you don't have too many global risks. The selling would have extended itself if there was an unknown factor which would have hit us. But there's no unknown factor. Right now, what we are dealing with, I think we're dealing with excesses in the market, compulsions of margin selling, capitulation in prices, and it's a typical time when if you have a tree, which I said in the morning, when there is a change of wind in terms of direction, that tree will shake. Overripe trees, overripe fruits and raw fruits, they will fall. And that is what the bull market does. But that does not mean the tree, which is the bull market and India, has got uprooted. Very simple to understand. Hemang Jani, give me a list of 2 or 3 names which you would be buying in this decline, where you would say, okay, I will buy the fall. I've been waiting for this fall. Thank God the fall is here.
Yeah, so Nikunj, after a long time, we are seeing this kind of a sharp correction. So obviously, it presents opportunities, and it would be great to look at some of the names. Like, for example, some of the PSU defense names. DML, I was looking at it yesterday. From the top, it is down almost 34%, and we all know how the entire story is panning out, right, across the businesses that they are in. So I think that would be a good stock to kind of accumulate. Apart from that, some of the health stocks like Max Health, Apollo Hospitals, these have corrected because of the Supreme Court ruling, and there is a overhang. But typically, these are all very, defensive, stable cash flow generating companies. So I don't see a reason why there should be such a steep correction in a shorter time frame. Apart from that, I think some of the hotel names, maybe Lemon Tree, Indian Hotels. We've all seen how that entire space is panned out. So I think it would be good to look at some of these stocks from a accumulation point of view.
The view on ITC, Hemang, brokerages seem to be of the view that now fundamentals will take center stage now that the technical factors are behind, that stake sale news as well behind. What's the road ahead for ITC?
I think the stock has underperformed big time ever since the demerger announcement was made, and then we had Pat looking to prune down their stake. So while the stock may not go down much, since there is going to be a little bit of an overhang for further selling whenever the time is right, the upside is also going to be muted. So I think the stock will basically remain broadly in a range. Let's say between 400 and 500. I don't see a big upside, at least in the short run.
Coming in, Naresh, what's your view on SBI? Because it was on your radar on a positive side, but if I look at the last 5-day performance, that stock is down almost 4%, while other private banking names have held out. Specifically on SBI?
So SBI was a breakout trade above that 630 to 650 mark. From there, the stock went up to 790, which was a good enough move. And now it is a case of a short-term dip before it starts another leg up. So there are 2 points where I would look out for, whether it stops at 740 or goes up till 710 and then takes a pause. But closer to this band is where I would expect a short-term bottom and then a slow and steady rally. The stock went through a sideways period for the last 1.5 year. And there were multiple attempts around that 620, 650 mark. The struggle was there. So the breakout is done. The trend is strong. So for now, 740 and 710 remain 2 price points where you want to actually accumulate the stock.
Okay, fair enough. In time, Naresh and Kunal will be getting in your top strategies within the broader markets as well. But what's the outlook then on L&T, Kunal?
Well, I would still believe that it's a formidable large cap name. It's not fallen as sharply as many of the other larger cap stocks also. Even in the last 2 months, broadly, if you see, the stock was almost at 3,700, 750 mark in, I think, early Feb. From there, it had corrected towards 3,300. Now back again to the 3,700 mark till last week. So it's come back towards a very mild kind of a corrective phase. The good part about the stock on the historical basis is that it tends to have a very low to moderate kind of a beta, especially in terms of, which is very advantageous in terms of steep market corrections. On the other hand, the stock is above its key support levels, 3,300, 3,350 mark, which has been a very good formidable support. A 50 DMA, for example, for L&T was tested at those levels. So I think on the back of all of these, I would probably expect the stock to perform in a very stable manner. Maybe it could correct by another couple of percentage points, but I think close to 3,400, 500 range should be a good entry point in case for a contra trader.
Hemang, yesterday the entire power basket was seeing an acute pressure, whether it was Power Grid down 7%, NTPC, NHPC, SJV, you name that, and even the financiers were coming under pressure a lot. Of course, the valuations had become punchy. Do you think it was only a price correction of sorts, or do you see a bit of a reversal in these prices on a fundamental basis as well?
So, broader sell-off and more so across PSU names. I don't think we had any specific, development relating to those power stocks. I think we should just let it stabilize maybe over the next few days. I do think that maybe a power grid NTPC would provide a great entry point also, apart from some of the private power names like Tata Power, which have also corrected quite a bit in the last few days. So as a theme, it looks okay to me. I don't think one needs to be, too much worried about the core fundamentals or earnings part.
Pre-open rates will just start kicking in. Not that anybody is expecting anything large. You want to look at ITC. The response yesterday was phenomenal. Monday Indigo. So the market is not bereft of liquidity. Large institutional investors are saying we want to buy where we see value. We do not want to buy into this madness of mania, what's happening in a lot of these tiny tunes on the market. ITC is at 427, impressive, such a large block deal, and yet the demand seems to be pretty decent actually for ITC. We've discussed ITC in team number of times in the last 24 hours, so I won't get into a valuation discussion on ITC. But where you want to go back and you want to say is that, look, where are PSU banks headed? Hemang, that in a sense has been the performing lot. PSU banks. SBI of late has rediscovered momentum. BOB, Can Bank, these stocks have been on a tear. Do you think in this fall PSU banks will also fall or they will outperform?
I think Nikunj, because PSU as a space, PSU banking has done so well and has outperformed both the bank nifty and nifty comprehensively. So when you go through corrective phase, because of that high beta nature of the, that segment, you will go through a bit larger correction. But I do think that this will provide you a very good opportunity because fundamentally in terms of numbers, in terms of valuations, things are looking quite compelling. And in fact, on many parameters, they are, placed much better than some of the private banks. So I don't think there is any reason to take a negative view at this point of time.
Booking profits, where you would say that, okay, I bought, the momentum is over, now time for me to take some chips off the table. What is that category, Hemang? Railways, defense, manufacturing, what is that space? Hemang?
Yeah, so I think defense would be one space that I would be more comfortable, because of the way the government has gone about, awarding the contracts, the overall positioning post the geopolitical issues. So I think PEL, PML, maybe HAL, these are the names that I'm more comfortable buying. But I think railways, one can take a very stock specific view, but I think the railway stocks have really gone up far too higher than what the actual fundamental change has been.
Taken. In the meantime, let me actually take a view from our technical experts as well as to what the top mid-cap strategies are at this point of time. Kunal?
I'll go with Voltas as a buy. The stock has relatively been, trading into a stronger uptrend. Even the last few days, the correction has been a bit shallow for the stock as compared to many of the other mid-cap names. So would go for a contraband Voltas at current levels, targets of 1070 and stop loss could be kept at 1020.
A contra buy coming in for Voltas. Interesting. What about you, Naresh?
So that would be a buy on Hindustan Copper. The stock has corrected almost 20% from the top of 300, 305. And the reason is we've seen a breakout in copper futures yesterday. That indicates there could be a 10% possible upside in copper prices as such. So that should augur well for this stock. Expecting this to make a bounce back move could surprise on the upside. So a good risk reward trade after a 20% correction. Stop loss at 220, a target price of 275.
Okay, so those are the top recommendations coming in. Hindustan Copper on the radar for Naresh. Hemang, on that note, we'll let you go. Thanks so much for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.